Now, without further delay, let's begin today's event, once again titled Small Business Recovery in Light of the FI Paradigm Shift. I'd like to introduce your moderator for today, and that's Mike Sisk, contributing editor, American banker. Mike, you have the floor.
Thank you very much, Ian, and I'd like to welcome the audience once again. We are very grateful that you've chosen to share some of your busy day with us. We know that your time is valuable, and we'll honor that today with what I'm confident will be an engaging 60 minutes or so of discussion. Once again, our topic today is small business recovery in light of the FI paradigm shift. And my name is Mike Sisk. I'm a contributing editor at American Banker, and my articles have also appeared in Barron's, Cranes Business, Inc., Institutional Investor, Strategy, Business, and Worth. And I am very, very pleased to introduce our speaker today. Allison Cerra is Chief Marketing Officer at Alkami. Allison leads all of Alkami's product and corporate brand marketing initiatives, establishing the company as a force in reshaping the modern banking landscape. Before joining Alkami, Allison led Hewlett-Packard's Enterprise's global field marketing division, transforming it into a digital-first data-centric organization. She has also served in a multitude of marketing leadership roles with companies including McAfee, Alcatel-Lucent, Frontier Communications, and Verizon, earning recognitions from the Dallas-Fort Worth American Marketing Association, including CMO of the Year and Top Researcher of the Year along the way. She has also been named an Advertising Age Woman to Watch, and Allison has also published and co-authored several books that explore the intersection of technology, economy, and culture. And we're just very, very pleased to have Allison with us here today. And before we jump into discussion, I wanted to reiterate a couple housekeeping tips. Just wanted to let everyone know that we've got time at the end for Q&A. Usually we set aside 10 or 15 minutes or so, and definitely encourage you to get that question into the queue as it occurs to you. And if we don't get to a question you've asked today, we will definitely follow up after the program. So please ask away. We very much want to hear from you. And with that, Allison, the floor is yours.
Thank you so much, Mike. This is so exciting to be here with you in the audience, so thank you so much for having me. So what I'm going to talk about today is Alkami is a digital banking provider for regional and community financial institutions across the United States. And one of the things that we have consistently heard from our clients and prospects is, listen, COVID is now hopefully behind us. The worst is now behind us. But the question really remains, how has COVID changed life? And in this case, how has COVID changed small business life? And so what Alkami did earlier this year in February to answer these questions is we surveyed 400 U.S. small businesses, those with less than 300 employees, knowing that this represents the vast majority, more than 90% of U.S. companies, and certainly are the backbone of the economy, to better understand, listen, what impact did the pandemic have on their business? How do they feel about the future? And perhaps more importantly for our stakeholders, for our clients and prospects and the financial institutions who are listening to this today, what's really happening, especially as we start looking at non-traditional providers in the lending space in particular, what's happening as a result of COVID and what have we seen? So with that, I'm just going to cover, Mike, to your point, a few slides from this, and we're going to leave plenty of time for you and I to have a fireside chat, and more importantly, plenty of time for the audience to submit their questions. But first things first, this is kind of like the slide on the top line, which is, listen, when we ask these small businesses, how have you changed as a result of COVID? For those who were not obviously born in COVID, but were at least around before it hit us, it's no surprise that we see there's a lot of transformation that's occurred. 27% of the total sample here of those that are at least 2 years old say they've transformed a lot or they've completely transformed. What might be more surprising, though, is that we see no delta or variation by number of employees. So we're starting to see the transformation was widespread, whether you were a micro business, 1 to 9 employees, or whether you were a larger small business up to those 300 employees. We also saw no significant differences on company age when they answered this question. So whether you were as little as 2 years old, meaning you were around when COVID was here, or whether you had a much more significant tenure, we saw no difference in how they answered that question. And perhaps what's more important is that when we followed up the question and say, now, do you think those changes are here to stay? Overwhelmingly, 40% of the total respondents say, yes, these changes are permanent. We are not looking back. That's as high as up to 50% for those that tend to be on the larger size of the spectrum. So we can look at this and say, look, the good news is these small businesses, though COVID was not easy on them, they've weathered the storm. They have now completely transformed, many of them, as a result of this, and many of them are saying those changes are here to stay. What we wanted to do is find out, let's take a look at what some of those changes have been. And not surprisingly, again, what we see is when COVID hit, we know that in particular the go-to-market engine for not just small businesses, but any business had to be completely adapted overnight. We went from brick and mortar to virtual to digital. We've heard some luminaries say, listen, we experienced in 2 months digital transformation that would normally take 2 years for many companies to realize. But here's what's interesting. Where these small businesses have doubled down is in particular on their distribution channels, and I want you to look at the online marketplaces, e.g. the Amazons of the world, and you'll see why this is important in a minute. We saw a 40% increase in the number of small businesses that started using Amazon and other online marketplaces post-COVID than those before them. So we're starting to see an increase here in online channels. Obviously, direct-to-consumer websites is one, but these online marketplaces are now starting to really get some attention. And as we start to look now at how the tech partnership landscape has morphed along the way, we asked these small businesses, what tech brands are you currently working with? We didn't discriminate here, Mike, but we were looking across the spectrum. But I want you to notice we also don't have a really long tail here. We had about 12 major brands from a lot of different tech domains. And what we see is 85%, more than 85% of small businesses are doing business with at least one of these tech brands. And I, again, want to call your attention to tech brands like PayPal, Amazon, even Square. We're starting to see that half of the base in some cases, if not more, if not a what I would call a significant minority, approaching 30% of the base, is starting to work now with these tech brands, which calls into question how is the relationship changing. And here is an interesting, kind of stat from the study. When we ask these small businesses, how helpful have all these brands been? For those who have been doing business with these brands in the past couple of years, how helpful have they been to you and your business? And this is on a top box scale on a 4-point. So these are people who say, these brands have been extremely helpful to me over the past couple of years. Call your attention to that far right bar, which is their primary financial institution. So this is who the respondent said, this is my primary union with whom I have done business. And I want to call your attention to something. 48% say that their primary financial institution has been extremely helpful over the past couple of years. That is a statistical tie with brands like PayPal and Square. The margin of error on this sample is plus or minus 4%. So you can see we're within the margin of error on brands like PayPal and Square. Amazon is chipping at the heel, nipping at the heel right behind that. So when they have to assess how helpful have these brands been, the positive side is that the primary financial institution, or PFI, still has, by definition, the most number of votes. The somewhat more cautionary tale is that they statistically tie with some of these brands that have now earned the favor of these small businesses. And we know that help can translate into trust. So when we start to look at the trust relationship, how many of them among them who do business with trust suggestions from the company, we again start to see an interesting picture. In this case, the primary financial institution does much better than the rest of the field. You can see well outside the margin of error, 47% of businesses say they still trust their primary financial institution on a top box on a 4-point scale. That's really good news. Here's the interesting rub, Mike. Look at the far right, another bank or credit union. So this is with an institution with whom they have no relationship. They are significantly less likely to say they would trust another, quote, traditional bank or credit union when they need recommendations. Okay, you might go, well, that's obvious, Allison. They have a relationship with these others. They don't have a relationship with the bank or credit union. We were curious, Mike, would that affect the lending relationship as well? And by and large, here's the finding. When you don't have primacy as a financial institution, when you are not the PFI, this is the banner that says how many would definitely or probably consider these types of companies for a loan. And what you see is while the dark bar of the primary financial institution still has the most at 83%, take a look at how the rest of the field performs against another bank or credit union. For lending, Mike, process that for a second. For lending, they are more likely to trust a PayPal, an Amazon, a Square than they are another bank or credit union with whom they have no relationship. So we're now starting to see this fragmentation of the relationship happen. We're starting to see cracks in the surface, a little chinks in the armor, where these oh so helpful retail providers, as I love to call them, are now starting to infiltrate a bit from the side flank on, hey, you already have a trusted relationship with us. We've been very helpful to you through the pandemic. What about lending considerations? You would think, hey, another bank or credit union would at least do as well, right? Because that's their traditional provider, even with whom I don't have a relationship. But that's not what we saw in the data. And it starts to raise some interesting questions, because the question now becomes, how do I gain primacy? Primary financial institution matters here. So how do I gain it if I'm one of the financial institutions listening? We've talked about lending here, Mike. This has all been about lending, right? We've led up to this crescendo. But let's just see, how do small businesses define primacy? So when we ask small businesses, why is this bank or credit union, why do you consider them your primary financial institution? And they could choose up to 4 responses on this list. I want to point your attention to the bottom of the list. What do you see? Lending, loans, most loans. What's at the top of the list? Where we deposit checks and or cash. So what's really fascinating here is while there's a side flank on the lending relationship, primacy really rules the day. And when it comes to primacy, primacy is not dictated by the lending arm. It's dictated by the deposits and the cash account, and secondarily by the online or mobile banking experience, showing that the world is somewhat topsy-turvy here. The question becomes, how do I gain primacy so that I can actually have an on-ramp by which I now can extend lending? Because once you have that relationship, you're in contention among these other oh-so-helpful brands they've developed relationships with, and you can actually start to generate net interest margin on the lending side, which we know post-COVID, that's where when we were flush with deposits, it's like, how do we get more loans? You get more loans, ironically, by getting more deposits. You have to get more deposits by transforming your own digital account opening solutions for businesses to meet them where they are and to be able to actually secure primacy through the deposit account. Once you're on board with them, we wanted to ask them, now let's talk about your most important attribute in an ideal business banking experience. Let's assume now they have primacy. What's important? Well, we asked a list of 12 here, and this is the most important rating as indicated by respondents, so they only picked 1. And what you see here is latest fraud protection and a robust online banking platform. The rest, after you get after convenient branch and ATM locations, you start to see a pretty long tail. Alkami, listen, we are so proud to serve these remarkable regional and community financial institutions that we serve. They are the backbones of their economies along with the businesses they support. They are good community citizens. Mike, unfortunately, when it comes to picking what really matters, though, and when a small business has to make tough decisions, a good community citizen is nice to have. It's definitely not where people are going to make their primary decision. So get the account with the digital account opening solution. We can talk more about that, Mike, in a minute. But then once you have the account, it's really about doubling down, giving them the latest fraud protection services and a robust online banking platform so that they can focus on their core competency and a financial institution can focus on its. I'm going to switch gears on you one more time. I'm going to go back to lending, because lending is more than just, hey, these other providers are coming in, encroaching on the relationship. Lending is about a supply and demand issue for small businesses that has been in this industry for a long time. And that is, small businesses actually prefer loans that are $100,000 or less. 56%, that's the amount of their most recent loan. And ironically, the same amount went to consider a maximum amount that is $100,000 or less. The problem for financial institutions is that it costs as much to underwrite a $100,000 loan as it does a $1 million loan. So there is a disconnect in the incentives for FIs to want to offer bigger loans because of very highly manual loan processes, manual underwriting process, and the like, and small businesses' penchant for wanting smaller loans. So this becomes an interesting paradigm shift, which is why we called this the paradigm shift. How do we meet small businesses where they are? How do we address their needs for smaller loans, but still make it very profitable for a financial institution to be able to serve them? And this is where, Mike, I'm sure you won't be surprised, it's about digitizing that whole application process, automating the rules-based engine behind it for underwriting, and meeting small businesses where they are, which is online. And that's where these non-traditional lenders, by the way, are increasingly meeting them. Even at higher interest rates, small businesses are flocking to them because they're avoiding the need for highly manual processes and candidly not getting approval in the first place. And we asked that question as well, in case you're curious. Let's look at how they feel about obtaining credit through this pandemic. And what we see is that about half the sample say they have struggled to secure lending or credit. And when you look at those who got a loan in the past 2 years, Mike, that number is 62% said they struggled. The lender's willingness to give out or approve loans has declined considerably. Again, 55% of the sample, but when you look at those who got a loan in the past 2 years, 67% say that. This is corroborated by the Small Business Credit Survey, which shows that fewer loan applicants are receiving all the funding they seek, if being approved at all. And they found that those businesses with good credit were more adversely affected than their bad credit counterparts. We know that big banks in particular are approving less than 50% of loan applicants, which opens the door for others, including these non-traditional lenders, including regional and community financial institutions, to pick up that load. And on that point, we asked mega bank customers, so this side of the sample are mega bank small business customers, who had answered an earlier question saying, I would not consider a local regional FI for a loan. We followed up and said, look, what would it take for you to basically reconsider that? And Mike, I'll turn your attention, lower interest rates certainly wins the favor, right? Only 11% said that would have no impact on their consideration. But pay attention, faster access to funds, instant response on approval or denial. You can actually capture a good chunk of the market there and make them turn their heads again. If big banks are turning these small business applicants away, they're going to go somewhere for the funding. The question is, are they going to go to another regional or community financial institution, or are they going to go to an online lender? And what this evidence shows is while interest rates is still very important, you can compete effectively just by changing your loan approval and application process. And we've candidly seen that with online lenders who charge higher rates than the traditional lenders do, right? My last slide here. I want to give hope because I want to make sure that the audience understands this isn't all gloom and doom, and I would say most of it is not gloom and doom. Most of it is just being aware of where these threats are coming from, being aware of how small businesses have changed, and knowing how to insert yourself into the opportunity. But one of the questions we ask, it's a flagship question we ask in virtually every Alkami study. We ask respondents this question: which of these do you agree with more? It's a forced choice. You have to pick one, Mike. The bank of the future will be a technology company, or the bank of the future will be a financial services company. When we ask that question, 38% of small businesses say the bank of the future will be a technology company. So the majority of them are answering the opposite. It's a financial services company. When we ask that of regional and community financial institutions, this is the irony, half of them, a little more, think that the bank of the future is actually a tech company. And consumers, we're starting to see them creep up more, that 44% of them are saying it's a tech company. So out of all of these cohorts, small businesses actually are the ones believing more than the others that the bank of the future will be a financial services company, which speaks to the strengths of those listening to this webcast. The question is, how do we, again, meet them where they are and adapt our own processes and our own technology, because these small businesses have transformed. Now it's up to the rest of us in this ecosystem to transform with them. So, Mike, that's my last slide. Curious of your thoughts, and we can have a conversation.
Yeah, absolutely. Yeah, thank you. Always nice to end on a note of hope. So,
we like to end on hope.
Yes, I know. I thought it was interesting. I mean, the last slide, a couple of questions. That last slide was sort of interesting too, with the community banks sort of being the most, I guess, almost pessimistic about their own future chances. You kind of hope that doesn't become a kind of a self-fulfilling prophecy. Like you gotta believe in yourself, right?
Absolutely, and I think this might be, I love this quote. There was a quote that I came across recently from Netflix that I had to remind myself of, because my background, I worked at places like Alcatel-Lucent, so we served these telecom providers, and back in the day when Netflix and others were coming in, these telecom providers were really trying to protect, I don't want to be a dumb pipe, I need to create value and revenue. And back in the day, I remember coming across this quote from Netflix, who in 2013, when they were facing competition from HBO, they had already taken out Blockbuster. Now they were trying to figure out this HBO threat, because HBO was putting more of their content on demand. Netflix came out and said, our goal is to become HBO faster than HBO can become us. And that is so profound when you think about that, right? And think about what Netflix did. They completely transformed and started producing original content so that they could compete against the HBOs with, back in the day, The Sopranos and the Sex and the Cities, so that now Netflix had the House of Cards and, the Orange is the New Black. And it became this kind of race to the finish of who was going to become who first. And what I love about that is it makes me feel the same way about our client base. The goal for a financial institution is to become a fintech faster than a fintech can become them. So whoever can basically get to the other side faster, meaning I don't need you to change who you are. You're a financial service institution. It's amazing. But how do you adopt the technology and the processes and modernize so that you operate more like a fintech, operate more in the economics like a fintech, operate more like in the experience digitally like a fintech without losing your roots of who you are, before they can move closer to where you are in offering more financial services and potentially even doing brick and mortar themselves at some point. Who knows, right? Stranger things. Amazon now has bookstores. Who would have thought? It kind of raises the question. I think it's more the race to the finish of who can be like the other one faster, and how fast that happens, I think, is going to be fascinating to watch over the next few years.
Right. And what's interesting about that, too, is that, thinking about the TV analogy, Netflix and HBO, is that as a consumer, the consumers won with that race.
That's right.
It was peak TV, right? So it's kind of a nice idea that everyone's kind of racing to accomplish these goals.
That's right.
The other, one thing also that struck me was just, it's a very obviously super complex landscape, lots of shifts going on, but in some respects the answer is kind of simple. It's hard to execute, but it's this idea like the digitization, this meeting customers where they are, it's reducing friction. It's really a kind of a universal answer to a lot of the kind of issues that you're raising.
100%. And listen, this is non-trivial to go solve, to your point. It's easy to say, really hard to go do. Because even if you think about the deposit account opening, the digital account opening process, Javelin released something in the past year that said half of the top 24 banks in the U.S. do not have digital account opening for businesses. Okay, so half of the top 24, imagine over the long tail of regional community financial institutions how that problem just gets exacerbated, right? And the problem is this has not been easy to go solve, right? To do deposit account opening, you have to verify documentation. You have to verify the identities of the entity and the associated business owners. You have to secure signatures. You have to have some kind of rules-based engine that says, do you need more signatures? Do you need more approvals? Or what's your risk appetite as an FI? And candidly, it's been up to the ecosystem of vendors to actually leapfrog and catch up to allow our FIs to be able to do these things, because this isn't, I wish it were, I'm aging myself, I dream of Genie where we just, done, everything's good. We have to literally change. And for the FIs out there, it's really about finding the partners in the ecosystem that understand where we're going in the vision, because consumers and small businesses, as this study reflects, are not standing still. They're being absolutely acculturated by all these other tech players around them, not just other fintechs. And so how do you keep your eye on that ball, and how do you give these FIs what they need and deserve, which is agile, scalable, automated, highly experiential digital platforms that allow them to now meet their users where they are.
Really interesting. Really interesting. So I'm kind of curious. I mean, how are when a primary FI doesn't deliver, what are the financial options for small businesses? I mean, it sounds like they're turning a lot to these other online marketplaces, but I'm just wondering if there's more to say there.
Yeah, I think at the end of the day, what I got from the research, and you can always look at research, Mike, and you can, 5 of us could look at this research and 5 of us could say, well, that was a headline that really resonated with me. For me, here's the headline that really resonated with me. When you look at this research, what these small businesses are saying is they want their primary financial institution to win. They trust their PFI. They are more likely to consider their PFI for a loan. They want the PFI to win. The challenge is if PFIs aren't delivering, and it might not just be a poor experience, it might be because the PFI's economics of competing to the point of the underwriting process on a $100,000 loan versus $1 million loan, a disconnect between the supply and demand constraints there. When that happens, what the headline for me is these small businesses are not opposed to looking at others. Whereas I think before, we might have had a more limited set of competitors we were contemplating, and those might have been other traditional FIs and maybe some emerging fintechs. What we're now seeing is that the other tech companies, including in the e-commerce space, absolutely are gaining the trust advantage with these businesses, have been very helpful to them through a very trying time for all of us, and that is opening the door of consideration for even something as essential as lending, where we likely wouldn't have seen that. I can't say for sure because we don't have this as a longitudinal study from 3 years ago, pre-COVID. Nobody knew it was coming, obviously, but I imagine it was a bit different a few years ago. And that would be my talking point to your audience. If you're an FI and you're a traditional FI, they want you to win. They need you to meet them where they are, and candidly, to do that, we need to help you transform, to modernize, to address the economic problem that is really prevailing, and to allow you to be as nimble and agile and responsive as these other non-traditional who are digital-first competitors, kind of taking a page from their playbook before, again, they can take a page from yours.
And I did that one result I thought was really interesting, and you touched on it just now, but this idea that after that primary relationship, that drop-off in trust for the into other financial institutions was so significant. I mean, what's that about? What's that about exactly? I mean, is it just because, like, during this pandemic, they just were able to interact more easily with online marketplaces at a time when online was kind of the way you had to interact, and they just sort of built up the trust, and the other stuff fell away?
I have another quote that I love, and I can't remember who said it, so forgive me, but somebody said we used to say that a small business needs a good accountant, a good attorney, and a good banker, and now it seems we can add a good e-commerce partner to the list. Yeah. So it's almost like it's become the fourth on the leg of the table instead of on the stool, right? It's like it's now becoming where they have developed these relationships with these other online communities, online marketplace communities, e-commerce vendors, e-commerce partners. And because that has become such a primal need for their survival over the past 2 years, when you had to completely flip the script and you couldn't meet with people face-to-face as much, and you had to figure out how to get there digitally, and you had to drive revenues digitally, those companies answered the call for them in that time of need. And it's easy to see how that would lead to a much more trusted relationship. So for me, I wasn't as surprised to see that another traditional FI with whom they had no relationship would have scored lower on trust. What I was surprised to see is that it would also score lower on consideration for lending. Because I naively believed, hey, they'll still go and look around for the traditional FIs and see what that's about. And what we found in the study is like, no, some of these brands have actually now exceeded even your ability to fight on your turf. Like, that's your God-given birthright, right, to do lending. So these other companies now have a way in to what was your birthright to do lending. And that was kind of the more surprising finding in the study for me was, wow, I wouldn't have expected it to be that open of a door.
Right. Yeah, that is a bit of a danger sign. And I guess, are there any the deposits were so key to making it a primary institution. I mean, do you see any threats coming from the kind of the online marketplaces to sort of try to capture that and to really kind of start to box out the financial institutions, both on the deposit side and also lending side?
Not that I have seen. Doesn't mean it doesn't exist. Not that I have come across yet. And I think what we're seeing these other non-traditional providers do is take advantage of those revenue receipts and the visibility into the business that they have to be able to not have small businesses apply for loans, but to pre-approve them for loans based upon the history that they've got and the data mining they can do. So they've completely flipped the script, right? They've looked at it with a blank sheet and said, look, why make a small credit when we actually know how much revenue they're getting? We can see that. We have as much visibility into their data as they do because we're collecting the receipts. I now have more confidence in my risk posture that this is a viable small business that's growing at a good clip. They're worthy of credit. Let me extend it proactively. So they've literally turned the table, which creates a whole nother paradigm shift again of why apply for credit when you can be pre-approved. Right. Why spend 25 hours doing manual paperwork trying to get a loan at a traditional FI when you can get nearly instantaneous access somewhere else? And even maybe at a higher interest rate, as we know, there is a price, and we know this, Mike, for just convenience. There is a cost of time to a small business. We say at Alkami that is the most limited constraint all of us have is time. You can't create it, you can't manufacture it, you can't save it, you can't. No, that is what the constraint is. So for a small business to avoid or obviate 25 hours of paperwork, or better yet, just be pre-approved, it's a pretty attractive value proposition.
And be approved for the size loan they want, right? That's
right. Not something that obviously makes them uncomfortable or makes them feel like, look, I'm not sure about that. This is something that they want. These I wouldn't call them micro loans because it's not like we're talking hundreds of dollars. $100,000 is still a respectable number here. But when you're comparing the economics of underwriting a $100,000 loan or $1 million loan being basically the same for an FI, you can't blame an FI for saying, look, it's not economically attractive for me to do these smaller loans. So what we have to figure out is how do we scale these smaller loans? How do we automate the processes around those? How do we digitize those processes? And when we do that, we have, some industry consultants are saying you could reduce the cost of underwriting that loan by 90%. Well, that's a game changer for an FI. Now, all of a sudden, not only is that loan profitable, it's highly scalable, and now I can start to work across a much bigger addressable market of small businesses, candidly, who represent the vast majority of companies in our country, rather than trying to compete for these huge loans on the other side.
And so, where do you think FIs, obviously, from your results, the primary FIs have got, they still have a kind of a pole position, but are there other areas that FIs sort of have a clear advantage at this point that you think that they, should, reinforce to the extent they can?
Yeah, I will tell you, again, looking at the Small Business Credit Lending Survey, what we find there is that when it comes to satisfaction, there is a clear winner here, and that is regional and community financial institutions have the highest satisfaction among small businesses when they contemplate post-loan, how that experience went. So there's a good footing here for especially regional and community financial institutions. There's a good footing, candidly, for them and alternate lenders, given that the biggest banks are turning away more applicants than they were a couple of years ago. So those applicants, again, are either going to forego funding altogether, which candidly is not good. That's not good for any of us. That's not good for their growth. That's not good for the growth of the economy. So they're either going to forego even applying, or they're going to go somewhere else. So I think that the key is, how do we basically make sure that we capitalize on what the strengths are, which are the service and what we've been able to deliver for these FIs in their communities, but how do we, again, evolve them and modernize their infrastructure, modernize their technology, modernize their processes. This is about transformation of the whole, not just the technology, but the processes that enable your employees to be more productive, that allow you to change your cost structure to be more competitive, and allow you to deliver these exemplary experiences. Mike, I like to say small businesses are the new tweens of the market. For those of you who know about the teens and tweens and kind of the adolescents, they're the tweens of the market. They want, like their consumer counterparts, they expect frictionless, intuitive experiences. That's a non-negotiable for them. But like big businesses on the other side of them, they expect, as you saw in the research, the latest fraud controls and a robust online banking experience. So you've got to be able to hit them both sides. Right in the middle, they sit between the consumer preferences on one side for quick, frictionless, easy, intuitive, and on the other side, it better be secure and it better be robust. And that's not an easy problem to go solve.
Mm-mm. And obviously during COVID, a lot of interactions went online. But is there any other sort of lasting impact from COVID about how small businesses are running their day-to-day operations that might kind of give banks sort of some guidance on kind of how to position themselves and appeal to them?
Yeah, so we asked a few questions about like how they thought about themselves pre-COVID, post-COVID, what they were modernizing. What we are finding is that a good chunk of the sample, and I'm going off memory here, so forgive me if I get this wrong, but it was around 50%. Okay, so we're talking it was in that ballpark of businesses are expecting to increase their investments in technology in various areas. In their back office processes, it could be obviously in the go-to-market engine, as we've seen they're already doing. And so what this tells us is they look forward as they contemplate their future. They are looking to double down and invest in technology in their businesses, which again suggests an opportunity for potential lenders out there who might want to capitalize on helping these businesses continue to transform. The 40% who say those changes are permanent from COVID, I'm not looking back. Not only are they not looking back, they're looking forward, and they're saying, how do I double down on this? How do I keep modernizing my operations, my infrastructure? Candidly, it's an inspiration to me. They inspire me because I'm like, look, this is something all of us could take a lesson from. They're aggressive, they're eager, they're ambitious, they're inspired, and they're ready for the future, and really it's going to come down to who can help them continue on the transformational journey they've started.
Yeah, and it strikes me, too, that kind of the more that the small businesses invest in technology and automate their own processes, the less and less interested they're going to be in doing manual processes with banks because it will cross purposes. Spot on. And all the data that I showed you, most of it was for businesses that have been around a couple of years. But to your point, Mike, imagine, the pandemic broke a decades-long slump in U.S. entrepreneurship. In 2020, we had 4.3 million applications for small businesses, which was like a 24% increase over 2019. It's the highest number ever reported on record. You have to think for any business born in the pandemic, they are like, I compare them to the millennial generation. They are digital first, if not digital only. So their entire appetite is different in how they contemplate the world and how they contemplate physical versus virtual and what they lead with. And there's a lot of them that were born in this pandemic and are now looking to transform themselves. And maybe for them, they're looking at actually moving more to brick and mortar, right, post-COVID, but they're still going to lean on technology as probably their dominant hand because that's what they were born in. Mm-hmm. Yeah. Very, very interesting. So even with all the technologies in place, so mobile apps, are there areas that FIs? I mean, there's many areas. I guess how can FIs sort of prioritize kind of where they put their energies at this point? Do you think?
I would tell them to do the following. Okay, just based on this research. One, you have to figure out the deposit account because that primacy. If you believe in the hypothesis that primacy really does matter. And it's about getting primacy, and when you ask small businesses what drives primacy, it's where they deposit their cash and their checks. Then you have to find a way to capture at scale the deposit account for small businesses. Because once you have that deposit account, that is where the most small businesses, over 50%, still think that's now my primary financial institution, which opens the door for a broader financial relationship. So my first recommendation is, if you're not looking at digital account opening for small businesses, you should be, and looking very seriously at that because that's going to help you get the on-ramp into the relationship. Once you're on the highway, as I say, and you have the relationship, now it's about you have to double down. And as I said, they're the tweens in the market, so you have to address their need for security and fraud prevention with the latest tools there on multi-payment fraud prevention that you can offer them, as well as on the flip side, a very robust, intuitive online digital banking experience, because those are the top two things, remember, that they said was most important once they contemplated their ideal business banking relationship. And then once you've got that established, now we can start to build on net interest margin with the lending. Because once you've got a digital account opening process that works, many of those processes, if done right, can apply. The documentary processes, the verification processes can actually apply to your loan origination side. And now we can start to basically build and expand out the relationship, because remember, when they think of their PFI, the last two things on the list were lending, right? Ironically. So they need loans, but they're not likely to think of their PFI as a lender. So let's start with where they think of the PFI. Let's get the deposit account. Let's build on that deposit account with fraud prevention, with banking, online banking, and then from there, let's hopefully transform the loan process to mirror, as much as you can on the documentary and validation processes, the digital account opening process. And at some point, you start to close the gap with these lenders back to, you got to become them faster than they become you. You start to really move the ball down the field into their territory without losing who you are. And I think that's how you can kind of look at this research and say, what do I do with this?
Very cool. Great research. I'm thinking we should maybe set some time now for some questions from the audience. Is there anything, before we do that, is there any other, Allison, is there anything else, just to sort of a wrap up on the, that was a great wrap up, but if there's anything else to say in terms of the research itself, because there's a lot of good material in here, and I really encourage everyone to dig into it.
Yeah, thank you, Mike. Well, we're just thrilled to do it. We will be publishing white papers on this, infographics, as you might imagine. So anybody interested in that, please, sound off, raise hands, send an email, whatever the response is. But certainly we will be publishing this in a more official way, because our goal here is, listen, we believe that regional and community financial institutions serve this economy. We believe small businesses are the backbone of the economy. So if we can do our part at Alkami to educate, to train, to basically evolve the landscape so that small businesses who need support and lending have a rich competitive environment from which to choose, and regional and community financial institutions are part of that consideration set, then we believe, that the U.S. is better for it, candidly. And so that would be my last call to action for the audience.
Fantastic. Well, my call to action for the audience now is, let's get some questions in here. So let's turn to some questions from the audience. Excellent. Well, I'm really excited to get to some questions, and just a reminder to our audience that if you've got something on your mind, now would definitely be the time to get that question into the queue. But we've got some good ones here already, so I think we should just jump right in. So, Allison, first question: even with technology already in place, like mobile apps, there may be areas that FI's current solutions aren't covering. What should FIs prioritize in their user experience to stay competitive?
That's a great question from the audience, so thank you for that. I would say that as we've been talking about today, what we're seeing is technology becomes the enabler for the financial institution to compete more effectively with non-traditionals. But what I would encourage you to look at, obviously, as we've said, multiple times already, a robust fraud prevention, robust online digital banking experience. Keeping in mind, these are enablers to changing business models or changing the experience for the end user. I'll give you an example. When we look at fraud prevention as an example, the ability to have your small businesses either permit or stop suspicious transactions through real-time omni-channel fraud alerts not only puts them in control of what they're approving or declining, it mitigates your risk as an FI because you're not taking on that liability now, as well as it differentiates you against a lot of these non-traditional lenders that don't offer that capability. At the same time, as you start to think about where they're going to keep moving the ball into your turf, it's going to be in some of the things we've talked about, Mike, around pre-approval for loans versus having to have small businesses apply for loans. So the more we can think about the technology as a means to an end to broader transformation, in how the business model evolves or how that user experience evolves across an omni-channel, both online and offline experience flow, that's where I think that we're going to see more and more open space in the future.
Thank you. All right, lots of good questions coming in here. Next one is lending the final answer now and forever for small businesses as they decide on who to work with, or do you see other considerations informing their decisions now that we're on the other side of this paradigm shift?
I am always reluctant to say something is a now and forever. This industry changes way too fast to say something is now and forever, but I love the question. I would say that, I think it's important to think about this as the journey, which is why I always use the highway example. Lending is certainly critically important, and that's where we're starting to see the wedge opportunity of these non-traditional other providers start to flank on that side, as we've talked about. But the deposit account is truly still where primacy is dictated, at least today. So I would say there is no such thing as what's the end-all be-all to this, because these small businesses are modernizing too quickly and candidly transforming too quickly to put them in a box that never changes. But what I would say is, look, they absolutely do see primacy as where they deposit their checks and cash. They absolutely, about 50% of them, are looking to continue to invest in technology to modernize their operations, their infrastructure, their processes. So if you can grab that deposit account sooner than later, you have a better shot at competing for when they need the investment and the lending for those technology investments. And by the way, when you look at what's happening with the biggest banks in the country, again, approving less than certainly we saw pre-COVID, these businesses are going to look for somewhere to go. So I wouldn't say lending's the end-all be-all. I would say lending is part of this journey that we're on, and how you get there might be a bit circuitous, at least initially based on the research.
Excellent. Thank you, Allison. And here's actually one that I can answer. There's a question: will slides be available afterwards? And one thing I wanted to let people know at the end, that we'll be sending you a link after the event that'll have a link to a recording of this event, and also a white paper, that covers the research, and will have a lot of the graphics that you've seen here today. So that'll be kind of coming your way. So you can please keep an eye out for that. And all right, good. So next question here: how do you digitally underwrite a business line of credit?
Not easily. So this is where the challenge really is. Whoever asked the question, therein lies the conundrum. What we subscribe to at Alkami is the following, okay? And this is not the only school of thought, but I will just give you our school of thought. Assuming, again, primacy is the deposit opening. First thing we would suggest is digitize your account opening process. So how do you look at non-documentary procedures, third-party validation checkups, and automating as much as you can the rules-based engine based on additional signatures you may need or proof of documentation you may need, so that you are making that process as frictionless, not just for the customer as possible, but for your FI. Once we get to the lending side of the balance sheet, now how do we leverage many of those same non-documentary digital rules-based processes to apply that same infrastructure and rules where applicable over to the lending side? So if this were easy to do, we would see a lot of FIs doing it already. So the bad news is this isn't trivial to go do. The good news is there aren't many doing it in the traditional sense. So partnering with someone who has the vision, whether that's Alkami or someone else, that has the vision of where the tech can be leveraged on both sides of the balance sheet to really give you the economics that you need to compete, would be kind of how we're thinking about that problem statement, starting first and foremost with digital account opening, but with an eye toward what can I repurpose from that digital account opening process to apply to the underwriting and the lending process on the other side.
Excellent. Thank you. All right, lots of good questions here from the audience. So as a company that provides services for the SBA arms of major lenders, would you recommend that we focus on how to improve our service levels to be more efficient, or present tools that allow FIs to offer to their small business clients?
I would suggest with SBA, to be very fair to whoever asked the question, I would say, well, we asked what loan types the small businesses have adopted in the past couple of years and what that looks like. We didn't dive deep into SBA specifically, so I don't want to overreach here, Mike. You will find I'm a clinical researcher to a fault. So I'm always very careful to let you know where we saw data and where candidly now I'm just, opining with you on what I might suggest there. But I would say the poll position that we've seen from the small business lending survey is, again, regional and community financial institutions really do earn the high mark on customer service and satisfaction. So I think you need to defend that turf, right? Because that has been where you've been the strong, leader in that race. The question now becomes, as we've said over and over, and forgive me for repeating it because I just find it really is how I see this problem. How do you keep what you do really well, which are those exemplary customer service levels, but how do you move more into the turf of the opponent with more digital experiences? And I think that that's a crawl, walk, run approach, as we've talked about, kind of like where do you start, what's the on-ramp, how do you now expand the relationship, and ultimately how do you get to the crown jewel of lending for a long-term relationship. But I would say absolutely the customer service and satisfaction that we've seen from other studies suggests that that's the turf that you have right now. Keep that turf, but now you've got to figure out how to move the ball in a different direction so that you can start to play a little bit more on the opponent's field without losing your identity, as we've talked about today.
Sure. All right, let's see here. So are FIs looking at vendor solutions for transformation or in-house development? Which do you think is the better option?
So I will tell you, based on not this research, but other research that we have done here at Alkami for, candidly, our own purposes, which is trying to understand the market and understand the buyers in the market as we look at this space. Overwhelmingly, we see most regional and community FIs are relying on third-party vendors for things like their digital banking platform. And the reason, listen, it's really difficult to compete with the investment that's being poured into digital banking by mega banks on one flank and neobanks and non-traditional lenders on the other flank, right? If you just look at the amount of investment going into this space, it's really difficult when you have to think about how do I, invest in R&D sufficiently to compete against that. So a lot of, and the clear majority of the FIs that we've talked to in our research are saying we are choosing to do this with a third party vendor who's got the expertise. Candidly, at Alkami, I can tell you we live, eat, breathe, drink digital banking. We wake up this is what we do. So it's really important to our clients that they know that, when the lights are out, this is what we're working on all the time. And that's just a reassurance to them. So I think the important thing is choosing your own path, right? Because what we also see is that if you're going to go with a third party, again, Alkami or anyone else, how do you maintain, and this is, near and dear to my heart as a CMO, how do you maintain your brand identity? How do you customize that experience so that it is still uniquely yours and it doesn't feel like something that's been prefabricated off the shelf, but you've gained all the advantages of something that's been prefabricated and scaled and is highly agile and highly integrated with your back office systems and third-party fintech ecosystems, but still allows you to be you and allows you to represent your brand in your unique way. That's where we find, again, FIs, regional and community, are the tweens there, right? I want something highly scalable where I know that it's got the latest features and functionality to help me compete. I know it's been road tested across millions of users, but I also want to be able to be me and do me. And that's something that's core to what we provide here, and certainly important as you think about this fight going forward of being uniquely you while also leveraging the technology and the agility that your competitors currently have.
Gotcha. Fantastic. All right. We've got about 5 minutes left here, it looks like. I think I've got time for another question or two. So how would you market to minority small business owners? Any specific best practices?
I love this question. nothing in this research looked at that. So again, very transparently, I'll always tell you what is and is not included in this body of research. So I don't have anything really helpful here to recommend, other than whoever asked the question obviously knows the stats that it's actually been minority business owners that have been most disenfranchised and most, I would say, neglected through the pandemic. So that is obviously the market to tap into. You know, the adage is that business ownership is the second pathway to the American dream, right behind home ownership. So how do we help minorities and others who have been unserved, underserved, or otherwise disenfranchised? And I don't have anything specific from this study other than to suggest whoever asked that question is highly aware of what the macroeconomic market conditions look like and where there's real addressable opportunity going forward.
We always pride ourselves in having a very informed audience, so
yes,
that makes sense.
Yeah.
All right, so let's. I think we've got time yet for one more question here. Let me ask: of the 50% of the top 24 FIs that don't have a digital business account opening process, what are they doing to change that, and what can a credit union do to get that process started? Because we see the need.
Yeah, so I would tell you that stat comes from Javelin. So Javelin obviously looked at this, and this has been within the past year that they looked at that particular stat. I would encourage whoever asked the question, reach out to someone like Alkami who can go through how we're tackling that problem, soup to nuts, on digital account opening. What our platform would allow your institution to do and how you could leverage that. Again, Mike, I wish I could answer that question, but given time, we could spend literally 30 minutes on that question, other than to tell you it's about those things we talked about. How do you verify identities of the owners, identity of the entity, do so through non-documentary processes, do so through automated third-party lookups for further validation, do so through a rules-based engine that allows you to determine and balance your FI's risk posture with its growth appetite. That's really where we're focused, and I would encourage you, reach out if you want more details on how we see that problem statement and what we're doing to solve it.
Fantastic. I think that is an excellent note to wrap things up on. Actually, we got I think I've got 2 minutes to top the hour, and we always try to keep things on schedule, knowing that so many folks are shifting something else in 2 minutes. So let me, first of all, thank you, Allison, for being here. Really a fun hour of discussion here. I really enjoyed it. I learned a lot. And I want to, of course, thank everyone in the audience for being here, for asking all those great questions, for being such a well-informed audience, bringing your expertise to the table on those sharp questions. So, and also just a quick reminder that, yes, we will be sending you a follow-up email that will have a link to the recording. You'll be able to download the full white paper based on this research. And with that, I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.